Hey guys, what's good? I'm Andre and today I want to have a look at one really important bank stock with you guys and try to explain why it might be a really good opportunity for us to jump into it. Guys, I've been missing for a while, honestly. I've been feeling a bit under the weather, and then between that and everything else, life got a bit too busy for me to have time for the YouTube videos, but I'm back, so hopefully this is good news. If you enjoy my content, please like and subscribe. Let me know so that I can continue prioritizing it and making time for it. But yeah guys, let's jump right into Webull. I want to show you why I think that Wells Fargo is one of the better stocks that we could look at right now. Of course, everything from the Russia-Ukraine debacle to everything else, inflation, all that's happening, and then let's see if it's a good time or not to invest into Wells Fargo and how we should do it. So here we go guys. So Wells Fargo has retraced recently all the way back to the 300-day moving average on the daily chart, and this is because, as you guys might know, the yield curve has inverted recently, and yeah, this is usually a deprecating factor for bank stocks. So with that in mind, as you can see on Friday, it had a pretty bullish day, despite the fact that the market overall wasn't really bullish, especially the Nasdaq market. The S&P did a bit better, but yeah, just overall not a lot of bullish action in the last week in the market. But guys, with Wells Fargo, why did I single it out? Why not Citibank? Why not Bank of America? Sure, pretty much every single bank should do well in a high inflation period because of the fact that as inflation rises, they make more money than they used to make. But Wells Fargo is especially well positioned for these guys because I've been reading some research, and actually they're the biggest bank when it comes down to credits. And if you have a look at their balance sheet, you're gonna be able to see the fact that the most of their revenues actually come from things that will be positively impacted by raising the interest rates as the Fed promised to do. So this is basically the Fed telling you guys that throughout the next 6-12 months we're gonna continue having a bullish thesis for somebody like Wells Fargo because of the fact that as inflation rises, we're gonna start seeing better and better revenues for this company. And this is also corroborated with the fact that Wells Fargo is not at all-time highs, it's actually at a recent low. So with this in mind guys, let's draw the levels here. So you know, the one thing that I always try to do is just make sure that the risk reward ratio is one that's in our favor. So as we can see, the stock bounced twice in the last month from the 300-day moving average. So if we are to buy in, we're gonna make sure that we set a stop loss just under the moving average. And this is actually an interesting fact. I'm not sure if you guys know, but obviously the markets are being manipulated by the big money, and something that happens is that actually when the price retraces, some of the big money pushes the price further back down so that it can trigger a couple of these stop losses before the stock eventually recovers. So now it's definitely gonna be a balance between your risk appetite and then just making sure that if the stock does retrace temporarily, you don't get stopped out before being able to benefit from the eventual raise. But this is why guys, I recommend anywhere between 5%, but it does not have to be sort of a hard stop, hard limit. So personally, maybe in this case I would go just under the previous low, which was roughly at $45. So this would be 6.2% of a potential downside. This is not easy. So let's say you're gonna invest $10,000, losing 6% is not something that you can easily digest. But if we look at the upside here guys, we're gonna potentially have an upside back to previous highs, not even new all-time highs, just previous highs of roughly 23.5%. So this basically guarantees us a 4-to-1 risk reward ratio. This means guys that you will make 4 times more money than you risk losing. So you risk $1 to make $4. Now this is especially good if you identify the fact that you're not really that great at choosing stocks that outperform. So if you're choosing yourself a 4-to-1 risk reward ratio, this basically allows you to be wrong 3 times before you're right once and still make money. And this is like, obviously, if you guys can improve the ratio for yourself and like make sure that you're wrong only every other time, so 1 of 2 times you actually get it right, this will mean that obviously you can expand your growth. But if you're a beginner and if you're just trying to find your feet and try to identify what's going on, having a 4-to-1 risk reward ratio is a great one. Actually, having a 20-to-1 risk reward ratio would be amazing. But obviously, like I hear this argument all the time, like, why wouldn't I invest in this other growth stock because it has a 50-to-1 risk reward ratio? Well, that's right, but what's that growth stock looking like? Is it actually making higher highs? Is it actually in a bullish market, or is it in a bear market, and you're gonna, like, you have one risk for 20 reward, but you're gonna take that risk and lose the one every single time? Like, obviously there's no way that you're gonna make money for the long term. But if we look at Wells Fargo here, guys, it's absolutely bullish. Actually, ever since, what is this, ever since COVID 2020, it's been on an uptrend all the way. If we look at the daily, it's not too overextended. Actually, on the weekly, sorry, it's not too overextended. Actually, it's well positioned here as well. It's at the 50-day moving average, this blue line. As you can see, it went below it twice recently, and then now it's finding its feet again above that. So this could potentially be a really good opportunity for Wells Fargo. Obviously, on the daily, it's also closer to the, well, it's kind of fair priced right now on the RSI, but definitely closer to being overbought than being oversold. And then if we look at the MACD, actually the MACD is starting to peak higher, or to actually curve higher, sorry. The MACD is starting to curve higher here, and let's see, yeah, where the stock goes. But if you're looking at a 4 to 6 month period of time where you're gonna potentially make 22-23% with a 4-to-1 risk reward ratio, Wells Fargo is a really well positioned stock. It's absolutely phenomenal from a fundamental point of view, and this is why, guys, I like coming with these stocks to you. It's so easy to get trapped in sort of that challenge of finding the next Amazon, finding the next Google, the next Apple. A lot of us are investing in PLTR, are investing in a lot of these high growth stocks, and sure, some of them are probably gonna make it. PLTR is a great example, actually, but some of them are never gonna break the mold, are never gonna be more than just a shit stock that's in a growth period but eventually won't actually be able to live up to expectation. So guys, with that said, what's Wells Fargo actually valued at? What is the company's intrinsic value? Now, this is something that's easily calculated with a DCF and a couple of other methods as well, guys. If you want access to them, I have a huge spreadsheet that's got like at least 50 to 70 different stocks that I track, and I built DCFs on all of them. This is available to all of my Patreons for just $5. Head on over. I'll be more than happy to have a quick chat with you. If you have any questions, I'm always there to answer them. And yeah, guys, that pretty much wraps up the video today. Thanks so much for watching, and I'll catch you next time. Take care.